All righty, welcome everyone. Welcome to the Hurley Investments Market View Commentary for Monday, June 21st. We are broadcasting live from the Westin Hotel in Westminster, Colorado, in the Denver area. I've got Keith with me here tonight. Introduce yourself. Say hi.
Hello, everyone. This is Keith Bybee. You know me.
I'm going to put him on the spot a couple times tonight, just so we can talk and I can have a little bit of fun with this. It's not often we get to do a commentary together. We have a lot to go over today, and I'm going to give you a short idea, a short idea of what I was doing last week. This is what we're trying to teach my kids or some of the youth to be able to do. It's a little slow motion, but here is 285 pounds in the air in slow motion. It's technically 20, this is 36 feet high. And there he goes. Look at how his arms come together, his feet hit the water. And that's number 2. Again, 6'3", 285 pounds. Off he goes. Learning how to enjoy the great outdoors. In all honesty, we are out here for the Thursday event, a Firefly Autism Laugh Yourself Blue. It's a gala that raises, obviously, funds for autism out here in Denver. It is as big as it gets. This is what Keith and I will be participating in Thursday. For that reason, we will be counseling the Thursday morning trade findings and adjustments. But we're here to do a little bit of good. Obviously, from what I taught my kids last week and what they were doing, I need to go do some good. I need to work on making sure we make a difference for some kids' lives. I thought we made a difference out there at Flaming Gorge. Amazing fun that we got to have to watch kids overcome or learn how to do hard things. This is going to be my screensaver on my phone for forever, to see my boy literally talk about a leap of faith. There you go. With that said, I'm going to make a quick run to our, well, actually, you know what? I'm going to go over last week's pulse. Plain and simple, the S&P fell 1.5%. It was the worst week since October of last year. So here's, I take a couple days off. I'm with the youth. I left Kiev the last week. Well, last week I left him to deal with the worst week in the market since October of last year. I can't tell you the comments he said to me as I got back in town. I was reading what was going on, but it was laced with a bunch of 4-letter words like AAPL and BIDU, NVDA. We had some fun, but I wanted to go over the understanding right now. And one of the texts I sent to Keith as I was catching up on Friday evening was a simple text that said, I think the stock market has it wrong right now. And I'm going to go through what I see and what helped me make that decision. Anyone know what the growth rate is of the S&P right now? Someone give me a general idea. What's the forward earnings growth rate of the S&P right now? Little different after last week's drop, but maybe I can even find it here. SPX. That's the ProShares Bond ETF. That is probably not it. Nope. SPX. Ooh. S&P 500. This looks like it's it. Of course, it doesn't have it. So let's see what you guys are typing in. Kohler says 10. Howie says 5. The forward earnings or forward growth of the S&P was a couple weeks ago upwards to 23. We just had a drop. I probably should have spent the time looking it up, but I'm going to use last week's earnings growth of 23, a PE of 23. 23 times earnings. When I look at Apple, there are a couple things I look at Apple and a reason why I'm a believer in Apple. PE is sitting at 29. Return on assets is at that average 23. Return on equity is at 111%. Return on investment is 31%. Profit margin sits at 23.5. As I look through the, how would I say this? As I look through the profit potential or the earnings potential on Apple, I see more growth in Apple than I do on the S&P 500. That is why, especially with a short ratio of over 1 and it needs to have some short covering, that is why I take a look at Apple with a target price of basically 160, almost 20% higher than where it's at right now. This is why I have a belief that Apple will outperform the S&P 500. If I go to some of our other core holdings, something like Boeing, not helping me out too much here, but the forward PE is at 45. Return on assets, negative 7.5%. Return on equity is 77. Operating margin is down, gross margin is down. If I was to use the same standard I just used for Apple, Boeing looks like it's not going to beat the S&P 500. Boeing's growth ratios don't look the same as the growth ratio for the S&P. In fact, it looks significantly worse. Do I have a belief in Boeing? I do. It has a 9.5-year backlog of its earnings. It has a short float sitting up here at 1.5%. I'm a believer in Boeing, mostly doing leaps for most people, unless you're a safe option strategy student. I have a belief in Boeing because of their backlog. Their growth ratios are significantly worse than the S&P 500, except to the return on equity. So this one actually does not go along with what I wanted to show you, but I have a but if. Let's go to Baidu. A lot of people ask me, Kevin, what are you doing investing in Baidu? It's almost exactly the same thing. Look at some of these growth ratios. Forward P is only at 16, it's only at 8. Earnings percent this year, 862.5%. The earnings per share is significantly higher growth than the S&P 500. We have two that are lower, one that meets it. Gross margin, 50.8%. Profit margin, 42.6%. Short float of over 2%. There are some growth ratios that don't look as good as the S&P, but overall, the growth ratios for Baidu show huge upside opportunity. I'm going to go through a couple more here that somewhat justify why we're willing to wait on some certain companies. Let's go through Bank of America. This is one that most people are in. You can totally see how it broke its trend line. I'll go ahead and use a pen here if it'll let me. Broke the trend line right there. Wow, from 42 all the way down to about 38 and a half. People wondered, well, why did you put so far out in time, all the way out to July 23rd? Well, we broke our trend line. We have an update today, but it covers us up to the earnings were expected on the 14th of July. And because it broke its trend line and went bearish, our expectation on Friday was we have to protect. Are we a longer term or a long-term believer in Boeing? Bank of America? Of course we are. And really, it comes down to earnings this year. Boy, that looks awful. Negative 32. Earnings over the next 5 years is higher than the S&P 500. Operating margin, profit margin, extremely high. Return on assets, return on equity, return on investment, they are extremely low. Kevin, how are you picking the stocks to go with? How are you picking what you believe in and what you don't? Well, we just went through COVID. Did COVID affect the way people were going into banks and getting loans? I believe it did. If you were to ask me what growth ratio has the most importance to me, it's profit margin. Its profit of 43.4%. I wish we had its gross margin here because that would be the most important. But its profit margin is almost double of the S&P 500. That's why we're looking at Bank of America. Let me go to Ford. I haven't checked Ford out. Ford's kind of sitting in the middle there. Wow, love it. Love it, love it, love it. Earnings this year, 148% growth over last year. Earnings next year, 63. Earnings in 5 years is 53. Return on assets don't look good, but industrials never do. Profit margin only 3%. That worries me. That worries me a lot. This is looking to be more of a short-term investment to see it run up to 17, 1750. Looking at a huge earnings growth quarter over quarter, and it's something we're probably going to be getting out of down the road because its profit margin does not look as profitable as the S&P 500. Kevin, what would change that? What would change you not dumping Ford? If its dividend came back, or its dividend was paying 7.5%, if it pays a 4% dividend, that would change our attitude on Ford. The reason why I'm showing you some of these is because for us, it has been a difficult summer already. It has been a ridiculously difficult summer. So let me see if I can get in here. I'm trying to. Got to make that a little bit different. Let's go to New Times Roman. Let's make it something reasonable. That's a little hard for me to read. The market has been ridiculous. Tell me how to spell in real life, please. Thank you, word. Ridiculously hard to understand. A couple of examples of what we mean. One example, the Fed just said that they that they are thinking about not a hike in interest rate, about tapering. They're starting to have the thoughts that they have to start to think about it. Said nothing about an interest rate hike. It's always been 2 years out. Well, they added an interest rate hike in 2023. I kind of disagree. If you go back and look, you'll see, well, here at Hurley Investments, we basically thought for a while now that plain and simple, they're going to have at least, at least 2 rate hikes in 2023. We were not thinking, hey, all of a sudden things are going to just work out and we're going to be sitting pretty. We knew after COVID, the opening was a process. And it's really a process it was a process related to the extra unemployment that was being given out by the government. I'm really going to have to work on getting this looking much better than it does right here. So plain and simple, this for the most part, or for all of it, has been expected. There is nothing here that should be standing out as, oh my gosh, we're in trouble, things aren't making sense. We basically have understood all of this for quite a while. This is nothing that should have caught us by surprise. It is nothing new. We know that we're going to have to deal with some unusual rebalancing of our market. It's not an easy process. It's never been an easy process to understand what stock markets are thinking, what the Fed's thinking, how the government, as we have this change to a more liberal, more spendy or less budget conscious. Not that that's fair to say, because it's not necessarily Democrats' fault, but we're dealing with some extraordinary times. Again, we've already had the most stimulus put out there, and it's just going to get more for this year if we do an infrastructure stimulus bill. I found it interesting that another or a different wealth management firm is actually giving out a seminar that you can watch tomorrow. Investing, gambling, and gamification, new market dynamics, new market portfolio metrics. It's actually on Wednesday that's giving this, excuse me. Markets are spurred by the wave of retail investors who replace disciplined investment analysis with speculation and, I can't see that I've got it hidden, and conjecture. For a lucky few, the irrational behavior provided short-term success. However, such behavior goes hand in hand with steep losses, which, you guessed it, it is actually gambling rather than investing. In today's market, many advisors don't realize they are dealing with the gambling outcomes, thereby exposing their clients to a gambling risk that continues to grow in severity. This new dynamic makes the migration of gambling risk in a portfolio critical and begs the question, are you rolling the dice with your client's portfolio? I am glad to say at no time have Keith and I had our Monday morning meetings and said, you know what? We got to get into GameStop. Kevin, dang it, we got to go out and buy a bunch of AMC. Kevin, BlackBerry's just going to take off. We've never been caught up in that type of mentality. Did we get caught up in Baidu? Man, we sure did. We watched a stock get 100% return last year. And then for the stock ownership, we created a long put at 330 or 320, 320, I think, 320. So we missed the first 10% down, but it basically lost 50% of its value. Not only that, we also on some of our long call positions created risk-free trades, which brings us to something I wanted to show you. I had a question come in. Kevin, am I reading my confirmation correctly? And it's listed right here. Did I just lose Apple for $52.50 in my account? Was it accidental? Was it planned? Great email. Hey, Kevin, help me understand what my portfolio is doing. And I'd love to basically show all of you, for those of you that may not know the what is it? The E-Trade platform. Give me a quick second. I want to show you what we're looking at and what we have the opportunity to do here. Give me just a quick second because I don't want to show any numbers or anything that's not been approved or let me go over. Not that you could see what was happening anyway. Okay, where are we at? I think this is the one. All right. Bill has let me share with you guys a little bit about what's happening in his portfolio and what's going on. It looks much like a lot of our other portfolios, except he has United Healthcare in here that we're sitting on and trying to get a great return on, which we're getting awfully close to a 10%. But if you go up to the top here, you have a trading tab, a markets tab, and an account tab. If you go to account history, and I've already prepped this up for the last 5 days, this allows you to see what's going on in your portfolio and why it's happening. Pretty neat because we had a couple calls that have already gone through a 4-for-1 stock split. And it looked like in this position, we had Apple calls that were at 52.50 and 87.50. If you were to look at that, and it kind of gives it away on the bought and sold where you have a plus and a negative, what type of strategy are we using here for those of you that have been in the education in the past? What is a strategy where we have a long call that acts as stock ownership with a short call where you have to sell your stock at a higher price? There we go, a bull call. It's an option strategy, it's a bullish strategy. Pretty neat because we got into the trade, sometime back, probably when Apple was closer to 250. At any rate, Apple took off higher, went through a split, pulled back a little bit, took off higher again. And at one point in time, I said, hey, if I sold an 87.50, he's obligated to buy the stock at 52.50. Excuse me, he has the right to buy the stock at 52.50. He's obligated to sell it up at 87.50 at a higher price. Pretty good profit there of $35. Because I let the long stock replacement strategy run, when we sold the short side, where he's obligated to sell at 87.50, it basically completely paid for this position. So what happened over the weekend is his shorts were exercised against him and he was obligated to sell the stock at $87.50. Because he had the right to buy it at 52.50, he literally bought the stock which was a debit out of his account. That's why it's a negative. And then immediately sold it for a credit back into his account. Plain and simple for being in a trade, 10 and a half months. A pretty neat trade because I think the whole cost of this was only $30 when it was all said and done. Bill got to make about $17,500. Pretty neat to have like some 6,000% return. But it's right here in the account tab. Move on down to the history, and then you get to pick the last 30 days, last 10 days, last 5 days, last 3 days, today. You can choose a range that you need to see what you've been in. You also have the ability to be able to create a filter where maybe all you want to see is all the stuff related to Apple. You can save it. Well, you're supposed to be able to save it. Simple Apple. Save, and then it'll just show you all of Apple for the last 5 days, the last 10 days, the last 30 days, and it won't show you the previous. Kevin, I want to see my previous stuff. Just clear it, save it, and everything else comes back that you've done. That history tab is a unique tab to follow up on what's happening in your portfolio and why. All righty, let's keep going here. Pretty simple week. There's no earnings to speak of, but more importantly, we're getting some technical bounces. The Dow Jones hit oversold on Friday. Didn't stay there long, bounced up. A lot of people might say, Kevin, for crying out loud, a huge update, you haven't ripped off all your protection. Nope. We're still technically bearish. We still haven't passed above the 50-day simple moving average. Not ready to pull protection off of all kinds of stocks right now. We don't day trade. We do let the trend, which sometimes takes 2 to 4 days to validate itself, give us a heads up. Pass below the S&P. We're passing back a high and going bullish on that. Pretty interesting. So we took a look at that. This was not the value stocks. This was the growth stocks that were moving today. NASDAQ kind of moving sideways, unable to get above a resistance level, but nicely above that 50-day. As you see, this blue line continue to move higher. It'll also push this building of a base higher above this resistance. The NASDAQ is a laggard this year, so expect it to move higher. No real earnings to speak of. Winnebago, Fuller Homes, KB Homes, Steelcase on Wednesday, Darden Restaurants, Rite Aid, BlackBerry, FedEx and Nike on Thursday, CarMax on Friday, durable goods on Thursday, new home sales on Wednesday, existing home sales on Tuesday. Probably be driven economically and probably going to have a bit of recovery because of this 3.5–4% pullback that we've had here recently. American Airlines has canceled 100 flights due to staffing crunch maintenance issues. Again, I don't know how many times we've said this. We're not going to hit full employment and people are not going to get back to work until September when that Fed Extra 300 runs out. There's some people that can sit at home for $48,000 to $60,000 a year and get paid more than having to go back to work. We're seeing it in regards to the airlines. Some people asked me a couple weeks ago, well, is now the time to get in the airlines? I'm going to make the same comment I made a couple weeks ago. Probably not until August or September. Not until they're willing to fill up and to get those flight numbers higher by having the staff to do so. What else did I give you guys in here? Beware of inflation headwinds. It could take a year to break even after a 10 or 20% market correction. This is a doom and gloom, but do feel free to read Mark's article here. More importantly, it's not necessarily inflation, it's going to be taxes. If taxes get raised much higher, we'll have a huge drop. It will probably most likely be 30 to 35% drop towards the end of the year, and it will take at least a year, if not two, to catch back up to where we used to be. It is not going to be inflation, at least not this quickly. It'll be the understanding if we're going to have those tax hikes and those capital gains. All right, where else am I at here? I'm going to pause you for another quick second. I want to go over a couple positions and what we're looking at. So let's get No Parker up there. Where are you at, No Parker? All righty. All right, some of the positions that we're looking at. I'm going to go over some of the core positions. Apple. Apple, we are continuing to let run as it's bounced above the 130 level. We will not protect Apple until we see some type of need before earnings. We do have some calls that we've dollar cost averaged, but we're sitting pretty good in general here. Apple, for the most part, we're just letting run. Boeing, we have double the protection on Boeing right now. We got caught up in needing to protect the shares with a 237 long put. We still have our old long puts that's in a bull put position. What we most likely will end up doing again is taking off our current protection, running our bull put or trying to pay off our other puts, running at a little bit higher price. We're looking to see Boeing run into their earnings. Baidu we have not protected, but boy, are we getting close. It is getting so difficult on Baidu to read them. It's just going to be a point where, hey, you know what? Let's get it protected. We did a great job of doing some dollar cost averaging. It's still holding that $84.60 line. If you were to look at a chart on Baidu, I'm going to show it two different ways. Baidu is just attempting to build a base. The key will earnings push it higher above its 200 and its 50-day. And actually the lows that we're looking at were 84.15, if not 176.90. But really it's 184.15 that we're primarily looking at for Baidu to make our decision. We've had a couple days where it's pounced below but finished higher. We're really chewing up the support level there. All those buy orders that are stacked at 184, we're going through. A little bit scary. I would love to see a company jump into Baidu, meaning not just a company, but a hedge fund again, something along those lines. It'll change the trend. It is only institutionally owned 65%, which means most of those other shares are owned by the Chinese government. Target price is 310. Mathematically, that's very easy to get to with their earnings. They just need to get a little bit of love from the market. Baidu might be a whole nother November, December that makes our whole year, where it literally moves up $120, $140, $150 in 6 weeks. All right, where else are we at? Bank of America we have protected. I like where we're sitting at Bank of America. I need to go up and get above it. Bank of America, for the most part, is protected through earnings. We have $40 puts at a relatively cheap price, only $1.40-ish if I remember right. $1.45. So we have protection at $40, a pretty good price to be at. Their earnings are expected to be on the 14th of July. Great position to be in to get us through earnings and to get us through any worry coming into the end or sell off of June and into the holidays of July 4th. All right, Disney's a big one. Love the idea that we put some protection on Disney. Disney is just not getting any love right now. Unfortunately for Disney, their earnings are usually the first week of August. We only have them protected out to July 23rd. Because of that, we may see, you might see us take Disney puts off and try to see a pre-earnings run. It's just so far out, being 7 weeks out, that we didn't have a real good advantage or idea of where it could go to. So we said, let's get some protection on it. Ford's unprotected, Facebook's unprotected. Let's go to our last two. Under Armour. Boy, it looked awesome this morning. We took a pretty significant hit on the protection. Have Under Armour protected right now out to July 23rd. We will most likely cash this in for a little bit of profit. We bought it at 121. We can sell it at 151. That's a 25% return on investment or a 30-cent profit. Because their earnings are also usually slated for the end of July, the very end of the first week in August, these puts will not protect us through the earnings event. So most likely we'll see these coming off here relatively quickly, maybe another update tomorrow where we capture a little bit of profit. And next time we'll look to protect it closer to $24 or $24.50. Its previous high on the range that it is ranging between. And Visa. Visa, no stock ownership, just on our calls. We are looking to do a little dollar cost averaging, but Visa's moving nicely. What cost us $22.59 is worth right now on the low end $25.75, the high end $27.15. We're looking really good on Visa. With that said, are there any questions you guys have for me or for Keith that we can answer for you today?
You missed JP Morgan.
I missed JP Morgan. How could I do that? We had an amazing opportunity on JP Morgan. A couple of you got assigned early and you took your maximum profit. A couple of you have not, and JP Morgan is doing its bounce back. You'll notice right now we have some leap long calls in place. 2 contracts at 55, 38 at 90. It is time for us, if we were really smart, which I like to think that we are, if we were to take, well, let's just take a quick peek. Our cost basis on some of these is at 35, 51 on these $55 ones. They're nicely profitable. The $51 one is up 95. The $35 one is up 60, 52. If we were to just take a quick look at JP Morgan, it's time to go out in time again and sell another short call. We got a pretty neat credit. But if we went out to our January 21s, where is it? Is it really? We are on January 21. So we got to our January 22s is what I'd be looking at. We can take in a credit of $10.55. I think our last one was 13. So we have the opportunity to take another credit in of over $10, have it being really close. Well, actually it is. It'd be in the money right now. Or we can open it up and maybe do a 160, $10 higher and take a $6 credit. $6 and what? 50 cents-ish right here. A neat opportunity to still be in JP Morgan, still have some upside opportunity, and create less risk by running into the end of the year with a credit now involved with it. Rich asked, what about Facebook? So pretty neat. We do have some positions in Facebook right now. Originally, we wanted to get out of Facebook at around 350. So as we're looking at Facebook, for those Facebook people, we've got some shares running on Facebook right now. Keeve and I are a little undecisive, but we're probably looking at adding before their earnings, which are coming up at the end of the month. It might make sense to try to sell a short call. The problem is to try to get out of this at 350 again. We just don't have the credit that we're looking for to go out to like a July 23 and to get it higher up at, you'd want to get it up somewhere in that 350 range. You just don't have a big credit of only $3. It might be something we do. For right now, we're letting Facebook run. Our goal is to get out at 350 and take, what, a 12.8% profit, I believe. 12% something profit is what we're looking for. You might see us add some short calls on Facebook just to get up to their earnings. We haven't made a decision. The reason why we haven't made a decision, their chart is a little bit difficult for us to read and for us to see. We really just wanted to take our profits and run. We almost had them, but it didn't work out the way we had planned. That upper line is only going to around 342. We might end up just doing a full collar trade again at the next earnings, placing it at the money, going a month later for that short call to mostly pay for the earnings and see if we can't run it up again. The good news is right now, Facebook is trading at 332 with our cost basis being right around 311. So we do have about a 3.5% profit right now. Great question there. Are there any other questions you guys have that I can answer for you? Anything? Going once? Going twice? It also looked like someone said that investment might already be out. Let's see if I can get it in here. Nope, that did not give me what I was looking for. Huh. Got it. So pretty neat. Obviously, someone already has listened to that. Abraham, thank you very much for putting that out there so that we know where it's at. All right, I don't see any other questions coming along. Guys, I appreciate you being with us here tonight. I hope this was helpful. We will be doing quite a bit of uploading over the next couple days, just so everyone can catch up from what was last week. Guys, you have a good evening. I appreciate your time, and we will see you again tomorrow night. Once again, we are not going to be having our trade findings and adjustments, as the fact that we are on the Firefly Autism sponsor group, and we've done some pretty good sponsoring for autism out here in Denver. Guys, have a good evening. Appreciate your time, and I look forward to seeing you tomorrow night. Bye-bye.